Hey guys, today I want to show you what actually happens behind the scenes before you get a trading signal. You're used to seeing the final result. A signal pops up and then you open a trade. But how does it all start? Let me walk you through my full routine. How I prepare, pick charts, and make decisions before calling a trade. First, I post an announcement in my Telegram group. That gives me about an hour to prep for the session. Then I open Quotex, add all pairs with 80% or higher payouts, and sort them by volatility. Some pairs are way too aggressive. I skip those. If the market's all over the place with no structure, even a good entry might just be luck, not analysis. So I only keep charts that show clear trends and clean movement. Once I've filtered out the noise and the structure's solid, that's when we start. Alright, first setup is a strong uptrend. Price is moving steadily along a trend line and testing a resistance level. It's rejected a few times, bouncing lower each time. Looks like a strong level. But instead of reversing, price starts squeezing toward the trend line. Classic triangle formation. That's a continuation pattern, which usually means the market's loading up for a breakout, not turning around. The resistance zone already got broken earlier, but the price pulled back. So now I'm watching volatility closely. Candles start small, then suddenly we get a surge. A strong green candle breaks through the level. That's my entry. Ideally, I should have waited for the breakout confirmation, so I go with a 15-minute trade. I also check the Vortex indicator. The red line, uptrend strength, crosses above the yellow one and starts pulling away. That confirms trend acceleration. Trade closes in the green. Trade number 2. Setup is different here. A clear downtrend. Price breaks through the trend line but doesn't drop hard. It enters a consolidation phase. A perfect time for my back to trend strategy is when the price pauses and then returns to the main trend. So I wait. A doji candle with long wicks appears. Indecision. And right after, a big red candle. That's my confirmation. I enter a 14-minute put trade. With impulse moving like this, you want to give the price time to reach the next key level. Again, I check Vortex. This time, the yellow line crosses the red from below and pushes higher. That confirms momentum is shifting back toward the downtrend. Trade closes in profit. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Trade number 3, back to an uptrend chart. Price is following the trend line and hits resistance. I've seen this before. It stalls, dips a little, then breaks through. So I wait. Price pushes back to resistance again and starts consolidating. Volatility drops. Then we get a green candle breaking the level, but on low volatility. Could be a fake breakout. I don't rush. I've seen this pattern before. Even after a pullback, the price eventually keeps climbing, so I check Vortex. The lines are wide apart, showing the trend is still strong. I go for an 18-minute call trade, giving price time to move through the next leg of the uptrend. Trade closes in the green. Trade number 4. Now we've got a similar setup, but on a downtrend. Price is dropping slowly, but near a support level, it starts to slow down. candles are getting smaller. That could be a reversal, but instead of bouncing, the market is just building pressure. I wait for the breakout. Then, boom, a strong red candle breaks through the support zone. I enter a put trade for 18 minutes. Why 18 minutes? Because the next support level could slow the move down, and I want enough time for price to break that level too, like we've seen before. Vortex confirms. Yellow line above red, and the gap's growing. Trend is still strong. Another win. Trade number 5. Now here's a more complicated one. The chart shows a nice uptrend. Everything's going smoothly, but then a rising wedge forms during a pullback. That's usually a continuation pattern, but sometimes price dips first and then shoots up. So I wait again. A big green candle appears. Breakout up. Looks perfect. I enter an 18-minute call. But here's the twist. Right after entry, the market stalls. Consolidation kicks in, momentum fades, and the price drops. Turns out it was a false breakout. Even with solid analysis, the market doesn't always play fair. This one closes in the red. As you saw, none of these trades were random. Every entry was based on many factors: price action near key levels, volatility shifts, confirmation from the Vortex indicator. Only after checking all of those, I enter. Here are the full results from today's trading session on the screen. Not every trade was a winner, and that's fine. What matters is logic and consistency. If this video was helpful, drop a like. It really helps. And if you want my real-time signals and breakdowns, the Telegram link is in the description. See you in the next one.